Hi, everybody, and welcome to the week ahead. I'm Tony Nash. We're joined, as always, by Tracy, Sam, and Albert. Thanks, guys, for joining us. Before we get started, please like, please subscribe, please comment. We read all of them and try to respond to all of them. So please go ahead and do that while you're here. Also, we are running a summer promo for CI Futures. This is our market forecast subscription product. You get 3 free months. So please go to completeintel.com/2022 promo and learn all about it. So this week, there's a lot going on, a lot politically, in markets, other stuff. We're going to talk about 3 main themes this week. First is the R word. Second is geopolitical fallout of the R word. And third is crude and dollar activity. I ran a poll earlier this week asking what is the most widely held consensus view that people are seeing right now, and that's on screen, of course. So first is recession. People are seeing recession as a consensus view all over the place. Next is equities lower, followed by crude higher, followed by a stronger dollar. So we're going to talk about all these things today. Sam, let's talk about that recession call, that recession consensus call. Powell's out this week saying, I don't think a recession is inevitable, after being really hawkish last week and driving people kind of to the edge of this. So what's actually happening right now? We're seeing credit continue to grow. And I know I showed you this earlier this week. Bank credit continues to grow. Is that meaningful? And what are you looking at to know if we're going into recession or not?
Yeah, I mean, bank credit, meh. But at the same time, are we going into a recession? I don't really think so. I mean, it's a booming summer. You have hotels full, you have bars and restaurants full, you have airlines unable to keep up with demand. I mean, that sounds like a small subset of the economy, but at the same time, that is a massive portion of the summer economy.
Yep. Seasonally, it's huge.
It's seasonally, it's massive. So do I think we're imminently in a recession? No, I actually think that's one of the big narratives that kind of misses the bigger point, right? Do we make goods? No, we don't make anything. What we do is we have services. That's it. So we're a service-based economy. If services are booming, you're not going into a recession. You're unlikely to see some sort of huge move in unemployment, because a recession technically is down on growth, down on employment. If you don't have the down on employment, you don't have a recession. So maybe you have a slowing of growth. That's somewhat probable, but a recession? No, it just not in the cards, at least until the back half of this year. In the back half of this year, you have a number of catalysts which could really whip things the other way in terms of both growth and.
Okay, so what are some of those catalysts? And when you say back half, you're talking about October, November?
Yeah, October,
That's
November.
kind of my thinking is if we're going to see it, we're going to start seeing it maybe late September, October, something like that. But what are some of those catalysts you're talking about? A couple of them.
Well, the catalysts then are actually to the growth side, which I think is, where I'll take the opposite side of a lot of people. Those catalysts are call it a devolving of the Ukraine conflict, number one. While that doesn't take off sanctions in the near term, it does take off the incremental oops. Then you have the beginning of the reopening of China, which is a big boost to growth in Europe and secondarily LATAM and the United States. So you put those pieces together and all of a sudden you're looking at a back half of the year that has more upside catalysts potentially. And it's not like you can re-shut down China and it's going to be a negative catalyst that's already in the numbers. It's not like you can have another war in Ukraine that's already in the numbers. If you begin to have those two come together, guess what? That's positive. So I would say the rest of this year is shaping up to be oddly positive.
And yes, but no, I'm kidding. Everyone's so negative right now that like everyone wants to just find the downside. Russia's going to invade Finland or something like that, right? And so,
so here's the play. I would say 3,600 is a lot less likely than 43.
I like that.
on the S&P.
I think what we're going to see is kind of like a balance, right? Where we see services really big this summer, especially in like the travel industry, hospitality industry, which we will see taper off this fall, which is not unusual. That always tapers off this fall, but we also see airline prices increasing, et cetera. And so people that booked their summer vacations in, Q1, those people are going to fall off. So I think we'll see a push, we'll see a pullback in that industry, but we could see growth in industries that Sam has been mentioning.
Great.
Yeah, and just to throw in there, I mean, we have to remember that at some point we have to refill supply chains on the drivable stuff, and those supply chains are at bone zero right now, and will require a whole bunch of employment, a whole bunch of production, and will actually have a fairly significant thrust to GDP. Auto production has been zero.
That's great. So my poll was wrong, which is awesome. I love that. And
Yeah,
so
I would bet against every single thing that your poll said.
perfect. I love that. Okay. So if you're in the US, that holds, but let's switch, Albert, to kind of say geopolitical risk and some other things. Obviously, Sri Lanka 2 months ago started falling apart, not started, but really fell apart. We've seen Ecuador and other places really start falling apart. Albert, what are you seeing, geopolitically, and what are you seeing in EMs related to what's happening in the US?
I don't really like focusing on EMs at this moment, just because they're not big enough to really cause a problem in the markets, in my opinion.
Yep.
I'm looking squarely at the European Union right now.
Right.
They're it's suspicious that, they come out with US bank tests, and then we come out with EU bank tests, and then literally a day later, the Germans come out and say, we could have a Lehman moment across the economy just because of these gas shortages that are happening. So
I put your tweet up, by the way, your tweet about the German Lehman moment up.
Yeah, and this goes back to just the topic we were just talking about, recession. You really need some kind of catalyst. There's something to break, and the only thing that I could even contemplate of breaking and causing, a quote unquote recession would be the European Union going through another financial crisis. You have a contagion that probably leaks over the United States financial markets, and the Putin price hikes become, a thing again. Justifies any kind of QE that the Fed will want to do probably in Q4 this year. So geopolitically, the EU is my target right now to look at.
Okay, so it's energy supply chains. Is the ECB a risk as well? Is there a risk that they tighten too fast or too much or anything?
Oh, they're going to have to. I mean, the inflation over there is climbing just as fast as the United States, and it's causing problems across the board.
Looks like he disagrees.
Well,
I don't disagree. I would double down on that and say that, I mean, Qatar, got our right after we had the train go down in Corpus Christi, came out and said, yeah, we'll send gas to the European Union, just sign a 20-year deal.
Right. And they did, right?
The European Union's not going to do that. I mean, nobody in Europe's going to do that. Right? I mean, it was kind of like we got your back, but give us a long-term agreement, and we'll do it. So the irony of it is that you have a crisis going on in Europe, and there was a Draghi moment of do whatever,
right?
Anything.
Sorry, Tracy, what's that?
They do not have
self-imposed crisis. This crisis it's a self-imposed crisis. Their energy crisis is literally self-imposed. So
okay.
Oh, there's no question that it's self-imposed. I mean, the European Union's leadership has been atrocious. I mean, they've had the worst energy policy you could possibly think of that hampers their economic engine for the last 2-3 decades. I mean, you can just throw a dart at the board and pick whatever policy they've come up with. It's been an absolute disaster. There's no question.
And why is that? Why is that? Like, why are they making such stupid?
Well, they've made such a big swing to the left. The leftist voters. And they're just climate Nazis. They won't even discuss discuss nuclear.
We're literally
you know,
talking
Don't
about
hold
Germany.
back. Don't hold back.
they won't even discuss nuclear power, which is absurd.
Right.
You know, they're like, oh, what if something goes bad like Fukushima? Well, yeah, well, what if a dam breaks, or what if a coal plant,
Right.
blows up, or God forbid, what if 10,000 Germans freeze to death because you don't have gas stored, because you didn't have any proper management. I mean, like, they're really bad at like managing what's going on without the United States holding their hand and directing them what to do.
Well said. Fantastic. Okay, so since we focus a little bit on energy there, Tracy, let's swing to talk about crude and the dollar. So our friend Josh Young posted something about kind of energy could potentially outperform, this sort of stuff, and really kind of looking back to the 1970s. I think, it really looked like we were heading there until this week, and then we saw things really come down this week in terms of, say, WTI, natural gas, other things. What's going on there?
I mean, I think it depends on what you're looking at. If you were looking at front month crude oil price, that's one thing where a lot of speculators are involved in. If you're looking at the spreads, if you're looking at the crack spreads that are still exploding, if you're looking at calendar spreads, right, that are up again this week, right, that pretty much tells you that we put a floor under front month crude price, regardless of who is involved in what specs are involved in the industry right now, because the spreads are really what I consider will tell you really where things are going.
Okay.
Right. So we kind of have a floor under it. Yes, oil had a bad week. We saw a lot of selling on downtimes in a very thin market and things of that nature. I don't think that doesn't change the overall fundamentals of the market, right?
Okay.
I mean, we're still fundamentally, structurally undersupplied.
So I'm going to ask a really dumb question here. I'm sorry if I'm ignorant, but
We know.
So are we seeing a short-term sell-off? Is it politically driven so that when Americans get together on July 4th, they can say, gosh, gas is really down this week. And then you have a 3-day weekend where people are talking about that, and then it rocket ships up after the 4th?
Well, I think it's a combination of most things. I think this week recession scares were really the big driver for that market,
Yeah.
right? Because everybody's thinking we're going to have a recession.
That and the potential of having an export ban.
Right. And
Recession, export ban, and July 4th.
an export ban. That said, and I kind of tweeted this out, having an export ban, especially a fuel export ban, would make things obviously worse. First of all, it'll raise prices for the EU, prices abroad, which after all of this with Ukraine, do we really want to hurt the EU that much? Because we supply them with 1 to 3.5 million barrels per day of diesel, which they're having a huge problem with. So really, are we going to abandon the EU at this point? Also,
My Texan friends would love to have more diesel to power their Ram trucks. So,
but the thing is that what happens is the fuel flows get so disrupted is that we're going to have to see refineries cut runs significantly in the US, which is going to ultimately raise prices. We may see dip in prices initially, but you're going to see higher prices ultimately.
I'll push back on that because you have a lot of storage, right? You didn't have a lot of storage before, so you don't have to cut back on runs. You can put into storage at a pretty profitable rate because you're forward selling basically all of your inventory right now. So I would push back on you have to cut runs at this point. Simply because.
And I'm going to push back on that. Just saying.
excellent.
Because we have to look at the East Coast, right? And so that's looking at gasoline runs, and to make a barrel of diesel requires a lot more oil than it does, say, to make gasoline. And
Right.
so if we see a diesel problem, we're going to have to cut back on those runs. So
Fantastic.
I think it depends on what coast you're looking at and what area you're looking at.
I mean, but
All we care about is
again-
Texas and Florida,
Again,
right?
you have a lot of places to store gasoline. I mean, it's not like we have an oversupply of gasoline at the moment.
It's true.
So,
And
you know,
RBOB's down this week too, right? So it's tight.
Yeah, it's interesting, Tony. It's funny. One thing that you said July 4th, and one thing that Tracy said thinly traded is that hilariously, every time we need a rally in the market during the thinly traded holiday hours, crude goes down, dollar goes down, and the market goes up. Almost by magic on the thinly traded holiday hours. But something you should watch.
University of Michigan. Come on.
Yeah.
It's a big driver, University of Michigan. So, okay, so let's move on. You mentioned the dollar, Albert. And so, if we look at the dollar, obviously, it's near highs for the decade. And that's great if you're in the US buying dollar denominated commodities, but elsewhere in the world, it's really hard, right? So where do you expect the dollar to go? I can't remember what you've said your expected target is. Likely
110.
and possibly. So likely 110 and possibly
120.
Okay. So possibly 120. So if it hits 120, Japanese yen is at what, like 160, 70, something like that?
163, 164. In my
It's just
calculations
crazy
right
to
off the top of my head. Yeah, well, it's just this is something Yellen's done in 2012. It's nothing new. She's driven the dollar up. She's out, into Europe talking that she's going to take the dollar up to 110. So this is nothing new. Everyone knows it's going to happen. Everyone's watching it. So, I mean, we're at 104 something today. Just
Okay.
sitting there and hasn't really done anything last day or so. So, another 5% up is not a big deal for the dollar.
So you see Yellen driving a stronger dollar. Sam, what do you see?
I would say that, I hate taking the other side. I'm going to take the other side.
Great.
I'm going to say that, Yellen's ability to control the dollar is de minimis at this point, mostly because the Fed is tapped out. Right, you had a 4% terminal rate for Fed funds priced in 2 weeks ago. Today you're sitting at basically 3.65. So you've got the peak, in my opinion, priced in for the FOMC hiking cycle, and now you're on the other side of that. So I would say JPY probably, you're probably looking at $1.10.
$1.10, you think? Oh, wow.
months.
Okay, great.
And you're probably looking at a euro at 108, 109. And it doesn't really matter if they go into a recession because they're, right. The US is going to back off in incremental steps the long end of the hiking cycle. And
Perfect.
the dollar price is long end of the hiking cycle. And, Yellen can do a lot of things. What she can't do is increase the terminal rate.
That's great.
No, the thing is, the Treasury sets USD policy, so she can certainly drive it up. I don't know how much ammo she has left because it's gone up, but we'll see.
Okay, perfect. That's great. So we've covered almost everything in that survey, and almost everything was wrong. So, okay. So
I told you everything was, I would take the other side of every single one of those.
Perfect. Okay, so
size.
let's talk about the week ahead. So we have month end and quarter end coming next week, right? So what does that mean for the week ahead? Everyone else.
Well,
Can I go? I'll go.
Yes, you go, Tracy.
I don't know. So, I mean, what I'm looking at for the week ahead is the last week of the month, and the quarter, right? So we have roughly about $100 billion of US equities that need to be purchased over the next 5 trading sessions. We have a rebalance in the RTY. So we should see a lot of inflows, roughly 598 billion of inflows into the US equity markets just because of the rebalance factor. We should probably see outflows in the bond markets. And then that's walking into a backdrop of negative dealer gamma. So we have a potential of, a shot higher in the markets, in my opinion.
Sam, same.
Yeah, I would say everything Tracy said in terms of the risk seems to be to the upside. I would also say it looks pretty scary when you walk into the end of the month in terms of the way the dollar chart looks right now. You walk into the end of the month with a dollar chart looking like it's ready. And sorry, Albert, looking ready to gap down, and you know you have oil where it's at. You could have a very interesting quarter end in terms of risk assets. You have a weaker dollar, you have a big buy on SPY, RTX, etc., or SPX, not SPY. You begin to put those pieces together and you begin to have a pretty risk on into the quarter that could be very interesting very quickly. You get any positive headlines out of China in terms of lockdowns, you get any positive headlines out of Ukraine in terms of ceasefires, whatever BS they want to leak, then all of a sudden you're more upside. So I would say you're skewed to the upside through the beginning of July.
Sam, you're optimistic today. That's amazing.
I know. Should happen.
And contrarian. Optimistic and contrarian. I love it. I love it. Okay. Anything else?
Yeah, I mean, I agree mostly with Sam. I think just because the market's so thinly traded, the dollar should be, chopping around probably on the downside a little bit just for the week up into the July 4th weekend. So long as the Europeans don't come out and start saying any more Lehman things, Lehman crash things, and all of a sudden, dollar shoots up just because, a fear factor out of the European side. But I mean, I don't think that's going to materialize over the next week, probably next couple of weeks after that. I think 30 days, we're starting to look at possibly something that happened in the European Union. But for the week ahead,
Fantastic. So the past 3 days carries into the next week. Fantastic.
Yep.
Okay, guys, thank you very much. Thanks for your time. Thanks for all the stuff you passed along, and have a great week ahead. Thank you.
All right. Thanks.
Thank you.